Hey, Longhorn, baby.
Are we closing fast now? Yeah.
Contract signed, money wise. Let's go.
Woke up feeling like a boss today. They said, boy, you know we got you, gonna do your thing.
Hi, everybody. My name is Mike Hoffman. I am the founder and CEO of Longhorn Investments, and welcome to the reboot of our Longhorn podcast. The goal of the podcast is we're going to talk to you about a little real estate, a little hard money, little sports, little politics, little news. Look, we want this to be interesting, informative, educational, entertaining, all of those things. So sit back, relax. We're gonna start today, and my very first guest is going to be Jeremiah Garza. Jeremiah is the COO of Longhorn Investments. I mean, imagine how I booked this guest, right? It was a stretch. It was tough. Jeremiah, will you introduce yourself? Tell us who you are, where you're from, how old you are. You married? You got kids? Tell us about yourself.
All right. My name's Jeremiah Garza, and again, as Mike said, I'm the Chief Operating Officer. I am from Texas, born and raised. South Texas is where I was actually born, Brownsville. If anyone knows, the southernmost tip of the state, close to South Padre Island, about a 20-minute drive from South Padre. From there, moved to Houston, worked for Stewart Title Guarantee Company. And so that's where I cut my teeth in real estate. And today, still consider myself a dirt guy.
I still really don't know. What did you do at Stewart Title?
So did a lot of stuff at Stewart Title. I actually started there.
Well, hold on. You started when you were like 13 years old. How old were you when you actually started?
I was in my early 20s, 21, 22. 22.
Okay. And what did you do?
And so I
don't think I know. I really don't think I know exactly what you did.
So I was actually working as a chemical dependency treatment facility in Brownsville. It was a nonprofit agency. I was a psychology major at the University of Texas at Brownsville, and I got laid off.
Okay.
And decided I needed to leave Brownsville. It's a small, economically depressed part of the state.
Sure.
And so I needed to find a new opportunity. I needed to go to a big city to go get a job. And so I had an uncle that lived in Houston. He was an attorney, lived in Humble, the northern part of town. And so I went up and stayed with him and called a temp agency.
Okay.
And said, I need a job. And so they placed me at Stewart Title.
Doing?
I was a scheduler.
A scheduler of what?
Notary closings. I picked up the phone, and we had, back then, HELOCs were the thing everyone was doing, the home equity line of credits. They were doing them nationwide.
Okay.
Deep Green Bank was the client who I served at the time, and they were closing, 2,000 to 3,000 HELOCs a month. And so I was on one of the teams that scheduled all those.
So you started as a scheduler?
Yeah.
You booked the appointments?
I would call notaries, call borrowers. I would coordinate the closing and set the appointment, let the lender know, and they'd send out the docs.
And I guess that lasted about 6 months for you.
No, that lasted about 3 weeks for me.
3 weeks. Okay. I was off by a little bit. Okay.
So very quickly, the group I worked for realized that I was capable of more. And so
shocking. I'm very shocked about you.
From scheduling, I moved over to special accounts. And so then we were handling refinance transactions for some of the national big banks. I was on a team of 3. So we did HUDs.
I did HUDs. Tell. Not everybody here knows what a HUD is. Tell us what a HUD is.
So the HUD was the old closing form that we used before the closing statement, which is what people get today when they close a real estate transaction. So HUD was the original form that the Department of Housing and Urban Development had released as a standardized document for lenders to close real estate transactions on. Lenders, title companies, kind of anyone in the space. So we coordinated the closing. We prepared the settlement statement. We got it approved. We were essentially a division of the guarantee company that was called Stewart Mortgage Information. And within Stewart Mortgage Information, they had the e-title division.
And how long did you do that for?
So I was there for probably in that role, maybe 6 months. And then I got moved over and asked if I wanted to take a position in the curative department, which the curative department is the process of curing a title defect. So there's an issue with title that you're not able to close. And so then you cure that defect. So I was there for 1 day. And the next day I got promoted to department manager.
Okay.
So they let the manager go the day after they moved me over, then asked me if I would like to take over as curative manager. Granted, I barely knew how to read a title commitment. Didn't know the difference between a Schedule B1, Schedule B2, Schedule A. You know, it was all foreign to me.
Okay.
But, you know, as I've done in life, I rolled up my sleeves, picked it up quickly, learned. And I had some great leadership at the time who encouraged me to, you know, be inquisitive. And I moved through the organization. So I worked as a curative manager from there, and I went and managed the customer account group. So I was responsible for the relationships of ongoing lenders, Wells Fargo, some of the large banks, Chase Bank. I traveled around the country and managed. Stewart Mortgage Information was a provider that did closing docs, credit, flood, title, settlement, VA funding. We provided ancillary services for the mortgage industry. We did collateral delivery. If there was anything you wanted to do as a mortgage banker and you wanted to outsource it, we were your back office, essentially.
All right, so I'm going to speed us up a little bit because if we go through this, we might be here for like a decade or so. So I'm not saying I'm not super fascinated by this because I knew most of the story, but I didn't know the details of the story. How long did you work at Stewart Title?
So I was at Stewart for 6 years total.
Okay.
At the end of it, and spent some time in the claims group. I'm doing claims examinations. I became an title examiner over time, did patent searches. We operated in 42 different states, so I became familiar with operating in a multi-state environment. And at that point, one of the friend that I worked with had gone over to work for a lender. He had gone to the dark side. And
why is that the dark side? I don't understand.
The lenders of the title people, we always saw lenders were the dark side.
Yeah, if there's no lenders, there's no closing, there's no business. What are you talking about? We're the good side.
That was it. It was they went over to the dark side. So I went to go work for a lender at that point. And they had a captive title company that they owned. They had just started it. They had been open for less than 90 days.
And so your job at this lender was what?
So I came over initially running the title company. The friend of mine who was there accepted another position, left. In that process, we also had an insurance company. They needed someone to hold the license.
Was this Aegis Mortgage?
This was Aegis Mortgage.
Okay.
And within Aegis, they had Solutions Title of America. They had Aegis Wholesale, Aegis Correspondent, Aegis Retail, and then the insurance company.
And we're not going to tell all the nitty-gritty of the Aegis Mortgage story, but how long did you stay at Aegis Mortgage?
So I was at Aegis until 2007. So I was one of the last five.
We're not supposed to tell all this part. Yeah. We don't have to walk them through laying off 300 people in one day, filing bankruptcy, all that good stuff. So how long? So 2007. So how long were you at Aegis Mortgage?
4 years.
4 years.
Yeah, I was there for a total of 4.
Okay, and then where did you go?
So then I came up to North Texas.
What made you come to North Texas?
So the president of the division I worked for at Aegis, who had been laid off a year before I left there, called me at that point and said, "Hey, I'm with a group in Fort Worth. We're going to start a title company.
Yeah, we're not going to use names.
How about you come up and join?"
We're not going to use individual names. You can have company names if you want.
So me and my wife, we left Houston, moved to Fort Worth, and started Tri-Century Title.
Oh, now we're getting warm. We're getting close now.
At Tri-Century Title. And I think that was 2007, October 1st, we opened doors.
Okay.
And I was the president of the agency. And then I believe it was about a year after we opened that we decided to pick up some fee attorneys and start running a fee attorney operation.
So that was the beginning of the end right there. When you decided to do the fee attorney operation, you knew then this could be trouble.
Yeah, that's the way it goes. So fee attorneys in Texas are unique in that you don't have to be a title agent. So an attorney can essentially become a franchise, I think is the easiest way to describe it, of an agency, and you can run title as an attorney in the state. So we started going out and bringing on some attorneys to serve as fee attorneys. We brought on an attorney who happened to be a friend of yours.
That's
I think
right.
That was the introduction. Was 2008, 2009?
I think this was 2008.
Yeah.
Yes, where your introduction to me began.
Yeah.
Yes. So we'll tell that story real quick. Just that I'm a hard money lender, right? I started Longhorn Investments in 2008, right? I had a partner then, and we started the company back then. But I'm a lawyer as well, right? My background is I did personal injury law. I knew nothing about real estate, and bumbled my way into the hard money lending business. And also, the way I got in the hard money lending business was because I was a fee office title company. And I got to meet wholesalers, and that is how I got into the hard money lending business. But the first fee office I was with, I think fired me. And no fault of mine or anything. I didn't do anything wrong. They just didn't want me anymore. This was a reoccurring theme, by the way. And I was introduced to you. And so I came out to Fort Worth, and I met with you and your partner, and you guys begrudgingly signed me up as a fee office title company, if I recall.
So I don't know that it was begrudging, but I brought you on. The begrudgment didn't happen until later.
Well, I didn't have a lot of business, right? The fee office title was a side hustle for me, right? Kind of like the hard money lending was. I was more focused on my personal injury work, and so it was not a main emphasis, right? And so you guys gave us a chance, and we became a fee office title company of yours, I believe in 2008. And then what happened? Maybe a year? Did we last a year?
I think you were right at about a year, 2009. It had to be 2009.
And in 2009, you sent me a letter terminating the relationship between my law firm and your fee office title company.
Yeah, unfortunately, you had an employee who was calling me and telling me how bad of a shop you were running and how I needed to fire you. So,
and the funny part is, though,
so I did.
She was really running the title, though. I really wasn't running it. She was running it, right?
She was your escrow officer.
Yeah. She did everything.
But she was telling me about these wholesale deals, and, they were shady, and there was fraud, and I was going to end up with claims, and I needed to distance myself from
our office.
The firm.
Right. Yeah. But it really wasn't that she didn't like the transactions we were doing, right? Because we were doing wholesale A to B, B to C transactions, right? Which is, super common now in the hard money lending industry and everything. So anyway, all right, so you terminate me, and so we're done. And so I think that's the end of our relationship, of our little journey together, right? And then I think this was October of 2009.
Mm-hmm.
Yes. October of 2009. And we won't get into the nitty gritty details because this is kind of funny. It wasn't funny at the time, but it was kind of funny. Jeremiah's company was trying to buy an insurance or an underwriter, underwriter, and they needed a loan. So Jeremiah's guys tasked him with finding $300,000. And he remembered that we were doing short-term bridge loans. And this was back when I had no discipline and had no idea what I was doing. And so you called me up and said, can you give us a 30-day loan for $300,000? and we will pay you $30,000, which is usury, but the statute of limitations has passed, so I think I'm okay on this and everything now. And that is how we got reacquainted, right?
That is it.
That's 2010. And that's 2009. And then, look, I won't bore you with the story, but the loan didn't go well. And I ended up having to sue Jeremiah's company. But kind of in the meantime and in between time, Jeremiah and I were talking on a regular basis. I was trying to find out where our $300,000 was. He assured me it was fine. My partner at the time did not believe that. And so anyway, that's what the lawsuit followed, et cetera, et cetera. And at one point, I called Jeremiah and I asked you to go to lunch. And I remember this because we went to E. Fratelli's in Las Colinas. You remember that?
Yeah. So by August, I knew, the purchase of the underwriter wasn't going to happen, probably July. And that's when I notified the state that I was ceasing operations. We were closing Tri-Century effective October 1. And so when I called you to let you know that I was going to close down the agency, that's when you said, let's go to lunch.
Let's go to lunch. And you had no idea.
Like, damn, I don't want to go to lunch with this guy. I owe this guy $300,000, but let me go sit across the table from him and eat some crow.
But you had no idea why I wanted to go to lunch with you, did you?
None at all.
Right.
None at all.
Right. And so we went to lunch and I brought a different partner. I had a couple different entities going on. So I brought my law partner and my Longhorn Investments partner, not my short-term bridge loan partner. I had a short-term bridge loan partner, a little different company. Our producers are probably like, you guys got to get to the chase, man. This is taking too long. But we went to lunch, and I knew all along I was going to offer you a job to come work for me and run my title business. And I knew you had no idea. But I had a feeling that, that you might say yes just because you were trying to be the good guy and wind down. Your partners had kind of left you holding the bag a little bit, and you had to wind down the title company. So I thought maybe there was an opportunity. And, the worst that you do is you tell me no. I totally understand. But anyway, so we went to lunch, and you never, what did you think when I offered you the job to come work for me?
One, I thought you were crazy for offering me the job. Two, I was crazy for considering taking the job. But really, you and I always had a good relationship. We were, still communicating regularly. I didn't really know what else you didn't know a whole lot about your partners at the time. Really just knew you were doing some, hard money lending, and then you were doing the transactional funding with your funding partner, and that was kind of the extent of what I knew. And I still had a client base of title deals, so I was going to have to find a home, a place to go. And so I figured, why not? My wife at that time had actually just joined Barrett, Daffin, Frappier, Turner, and Engel.
That's right.
So she was working here in Addison.
And that was a foreclosure law firm.
That was a foreclosure law firm.
Right.
And so she was driving from Fort Worth over here, which is, 45-minute hour drive in the morning. And so, it just made sense to relocate to Dallas anyway. So just kind of all the stars lined up. It made sense at the time. And I don't remember. Did I say yes at lunch or did I call you back afterwards?
No. You definitely had to go think about it because we caught you off guard. You were definitely a little like, huh? What? What are you talking about? Are you sure? Like, let me think about it. So no, you thought about it for a little bit, and then eventually you said yes. And look, the plan was then you were going to come over to our office and you were going to help run. You were going to run the title business.
Just going to help grow title.
Right.
Run the title off.
That was the goal. It was not, there was no intent to get you into the hard money lending or any of the other shenanigans that we were getting involved in. Right.
Now, I was the dirt guy.
You were the dirt guy.
Love dirt.
You were the dirt guy.
That's what I wanted to do.
So this is now, we are in 2010, right?
Yeah. October 1st of 2010 is when I officially came over here, started reporting to work here.
Yeah. Yeah. And so back then, we had a whole different cast of characters. And so you were running title. We were doing loans. I was doing a little transactional funding. I was doing a little personal injury, had some law partners, doing some litigation, doing some bankruptcy, tax work, right? Litigation, right? We had some litigation going on. And
5-6 attorneys. Yeah.
We were kind of focused on the law firm and the lending thing. It just started kind of growing a little bit. 2010, it really started growing a little bit. And I'm trying to remember how you got involved in the lending. And were you in the lending? And look, we'll detour real quick.
I remember how I got involved.
Oh, yeah.
Lending.
Okay. Oh, well, okay. What year was that? When did you get involved? Because you came in 2010.
2012, probably.
Had we started with BLT then?
So, no. This was pre-BLT, right before BLT.
Right before. Okay, so let's run, because look, I'm old. I can't remember. How did you? I mean, I sort of remember you looking at us like we were idiots, like we didn't know what we were doing. I remember that part, but I don't remember what really triggered it.
So all I remember is, so I was walked into your office. I was standing behind your desk. You were sitting there, facing your screen. You said you had to get these docs out. And so I said, "What are you doing?" And so I sat there and watched you manually type up a set of loan closing documents. And when I say manually, you had the state bar forms, and you were
filling in the blanks.
Yes. Going through this document and changing the borrower name, doing Control F, find and replace to draft this set of documents.
Yes.
And I remember saying, "What are you doing?" And saying, "Let me help you fix this."
I remember that.
And that was the start of my involvement in lending.
Interesting. Yeah. So me doing loan docs triggered you. And that's back when we were probably closing 8 to 10 loans a month or something like that. Or something right around there. And so we'll take a little detour here too. This is a whole detour thing. And so then you started helping us a little bit. You started looking at how our processes and procedures worked. And you were like, you guys are making this much harder than it has to be, if I recall correctly. I mean, I don't think you worded it quite like that, but it was something to that effect.
It was a very manual process. And certainly at the time, you weren't leveraging the resources that the traditional mortgage world used.
Well, how could we? We don't know anything about the traditional mortgage world.
I remember the first time I looked at a file and I go to look at the credit report.
You got to skip some stuff. Some stuff has to remain hidden.
Yeah, this is a long time ago. And the credit report they're using was a tenant screening report.
Again, not supposed to share this part with my mom is going to be watching this, right? She's, what? I thought you knew what you were doing.
You got something. There's still a lot of guys who don't get anything at all.
That's true.
You were doing one up from a lot of people, back then.
Fair point.
You were a trailblazer.
Yeah, trailblazer of tenant credit. Yeah, super important.
But look, you had the meat of it was all there. You had a title commitment. You were getting a title policy. You were getting surveys. You were doing the standard stuff that I assume you, through your title operation, you had a basic collateral file.
Yeah. I don't know exactly. Well, I mean, I think the escrow officer helped and my other partner helped. I mean, he was a bankruptcy guy. He knew a little bit about, real estate and closings and things like that. No, you know more. I mean, we're not saying that. Okay, so now we're like 2012. And 2012, this is interesting. So Longhorn Investments is up and running. And we actually, at this point, we are on our second fund, right? We did 3565 in 2011. We did our first fund. Or 2010. 3565 was our first fund that we used to lend. And then we went, started Trident at the end of 2011. Right. Started in 2011.
Launched it early 12.
Yeah, we started raising capital. I got some commitments at the end of 2011. And then 2012 is when we started hit the ground running, started doing some loans, got some folks to move them over from 3565, bought those notes. did that. And then we had a really interesting twist, right? This was a really, I mentioned BLT before, and it was not bacon, lettuce, and tomato sandwich, right? It was a private equity group from Connecticut that approached our company, my old partner at the time, about buying, repairing, and then property managing as many properties as we could in the state of Texas, right? And that was really, I thought, look, there was a lot of stuff going on, but that was really interesting stuff because we ended up buying almost 1,000 properties, I think.
Yeah, it was just under 1,000 over a 18-month, almost 20-month period of purchasing before the portfolio was disposed of. And a little bit before that is when I became the operations manager of the firm. And so that point I was involved in the law firm, the title company, and hard money. And then BLT came up and you said, here, go help the team, because we were hiring from renovation to property managers to.
So were you kind of the COO of BLT with?
So initially when we first started it, now then it had its own entire team, but they were a subsidiary of ours. So essentially
So what was your role? I mean, this is so long ago. What was your role in BLT?
I don't know that I had a formal position in BLT.
Okay. Yeah.
But certainly felt like I did a lot. From hiring, firing, the HR,
But the fun stuff that we did, like here was the thing. We bought almost 1,000 properties, and we bought almost all of them, not all of them, but we bought almost all of them at auctions.
Over 70%, I would say, were purchased on the courthouse steps the first Tuesday of every month.
And that was wild, right? Did you go to the auctions?
I did.
Okay, because we had teams. Look, my old partner, I give him a lot of credit for this. It was really genius, creative what they did and they came up with. And we would have teams of people going to the auctions because we were just doing Texas, right? So for those of you who don't know, real estate foreclosure is the first Tuesday of the month in the state of Texas, in every county in the state of Texas. And we were primarily buying in Dallas, Houston, Fort Worth, and San Antonio, right? Is that right?
Yeah.
Okay. And so then we would have to send teams to each county auction, right? In Dallas County and we did a little Collin, but Fort Worth and San Antonio and Houston's got multiple counties. And we send people down there. And this is the crazy part. People don't know this in Texas. You have to buy the house right there. And when I mean buy the house, I'm saying you have to give them cash, right? Cashier checks, paid to the order of cash. I mean, we became a system of this. And they give you a deed right there, and you bought the property. You own the property going forward right then and there. It's yours. So what we would do, and I don't know, because I don't remember going with you. I don't feel like you were on my team ever.
We always had separate ones. So I was typically in Tarrant County, Fort Worth auction.
Were you a money holder?
I was not. I had the list and was
you were running
bidding.
The auctions. You were running the bids. So my job, I had two jobs, right? I would walk around and watch our bidders, but I had a backpack with a couple $1 million in cashier's checks in my backpack.
We had at least $3 to $5 million going to each county.
Yeah.
In a fanny pack or a shoulder pack?
No, for me it was my backpack. I put it in my backpack. And then I would, if we won a bid, then I'd have to go over and sign and complete the transaction and pay the cash and everything and take the deed and mark it down. And that was fun, except when it was miserably cold or, I think one time it was January 1st. We had to go. That kind of sucked. I remember that. But that was we learned a lot, right? That was a very interesting real estate experience because we bought these properties and then we'd have to go in and we'd have to repair the properties.
And all purchased sight unseen. It was an algorithm, a formula that was done. We did drive-by inspections.
All sight unseen.
We did not see the interior. We tried.
A couple times we did. Some properties we did.
tried.
Yeah.
But most of these, now at that point, I remember we were typically doing 30 to 60 a month until the 1 month that they bought 100 in 1 month at auction. Of course, we didn't have enough staff to renovate 100. So then I think we slowed down the following month because we created a backlog for the team. But I mean, I think look, that's the basis of our underwriting team today.
Yeah.
The underwriting manager is the guy who ran renovation on 908 single-family homes, who knows the ins and outs of renovating homes here in Texas, because that's all he did for 2 years.
Yeah, that was a crazy experience. And then you and I kind of got out of that in 2013, 2014.
Yeah.
2014, we were kind of...
By then, they had their own team. We had a full property management company that was running independently from the asset acquisition company that was actually leasing these, signing them up, collecting rents. Yeah. That was doing the whole dog and pony show.
Yeah, we learned a lot. It was very educational. We learned about rehab bids. We learned about
evictions,
property management. I was going to say yes, evictions. A lot of our team were former members of our BLT group. Right, that was a really interesting time. And so right along we were doing that though. You and I were also kind of building up our hard money lending business. Right. I mean, we were still working on that. We were doing loans. It was kind of growing a little bit, right? 20, 30 a month. I think we got 2014, we were doing about 30 a month.
30 a month, yeah.
Yeah. And then 2015, this is so funny, right? So then we get into 2015 and things start really taking off for us a little bit, right? We start, the pace picks up a little bit, right? Because that was our focus.
When did you get the first line of credit, though?
Oh, Veritex Bank? Oh, that was like 2012.
When that Sovereign, and originally...
Sovereign Bank was our first line, but that was, that wasn't to the fund, really.
That was to Longhorn.
That was to Longhorn. And then we got the Veritex Bank line. And that's a whole nother story too. Maybe we should have Malcolm on. Well, let's see if Malcolm will come to our podcast. He probably doesn't even remember, right? But I mean, Malcolm Holland's the chairman of Veritex Bank, and it's a really cool story. They gave us our first line of credit, and I remember talking to Malcolm. We sat on a board together at a country club, golf club, and I look at Malcolm one day, and I remember I'd driven my daughter to Sunday school. I'd gone from my house to Sunday school, and I think I passed like 4 Veritex banks on Preston Road. And so I was like, you know what? We need a line of credit. Trident needed a line of credit. And I said to Malcolm, do you know what I do? He goes, you're a lawyer. I'm like, yeah, I'm a lawyer. I go, I'm a banker. I go, I'm really a banker. I need a line of credit. And he was like, all right, come talk to me. So I remember our meeting was on a Tuesday. I saw him a week later, and then he offered us, after that meeting, our first line of credit. He gave us $1 million line of credit. And this is kind of the cool story. That was 2012. And now, and I'll jump ahead a little on this, and now in 2025, we are one of the largest lines of credit at his bank, right? We went from $1 million, and now we have $211 million line of credit with Veritex Bank. And we've been with them the entire time. And it's been a pretty cool story. So maybe, mark this and we can talk to Malcolm. Maybe Malcolm, or, rest in peace, Tony Stevenson was our loan officer who we love very much. He's no longer with us. He was our banker, and he grew with us for a long time, and we had a really great relationship with him. But Veritex this is our pitch to Veritex. Sorry, other banks that might watch this, but Veritex Bank's been a great partner for us over the last 12 years. It's been a really good relationship.
Yeah, absolutely.
But anyway, all right. So Jeremiah's working now. Now I got you almost full time in the lending. We're still doing title. We're still doing title at the time.
Yeah. I mean, we had
I don't know.
3 and 4 escrow officers.
Yeah.
It was.
We skipped that whole story though. We had escrow officers, we had some, and we had a few, and then it's been.
But at that point, I wasn't day to day involved in closing deals anymore, because I used to sit at the table and close deals regularly. I mean, that was my life.
As an escrow officer.
As an escrow officer.
Not as a lender or something like that. You're talking about,
Okay.
You're talking about
Yeah, so this
The
was
title
really
world.
me getting out of the title world, was that 2012, 13, when I started spending time on BLT, really setting it up, establishing it, forming the company, bank accounts, processes, as your partner was hiring his leadership team for that business unit.
Yeah.
And then I stepped out, and now we got to have fun in the lending world as he continued to
Right.
operate.
So let's kind of talk a little bit about Longhorn Investments. Let's talk a little bit about what we do, because we could go year by year, and whoever's still watching is probably asleep already. So I don't know if we want to keep going that, but maybe we can talk a little bit about what Longhorn Investments does exactly, because I know you can describe this better than I can. I will just do it in fewer words, but you can give the long version, the long form version, and you can tell us a little bit about like what Longhorn does. What did we do then, right? Because it's an evolution, right? We're going from 2015, now we're 25, so 10 years later. So we were still kind of a mom and pop-ish organization at that time, I'd say. I mean, maybe a little more sophisticated than that, but I mean, that's kind of...
Look, I certainly think from the competitors at the time, you had a more conservative approach than most people. I mean, from day one in Longhorn, credit and appraisal have been part of the collateral file. I think even today you see a lot of people who don't get appraisals, who still use alternative valuation products.
For sure.
And still today, a base of our origination of loan and the underwrite is to get that appraisal, to review that appraisal. And it's part of what has allowed us to get the leverage and establish the relationships with our banks that we have.
And I want you to talk about, and we're going to talk about this just for a little bit, right? Not to get too wonky, but we get appraisals, right? Like you said, for the banks, right? And now, we have a fund. We have, 450 investors in our fund, and it makes them feel better. But I believe, and I want to know if you feel the same way, that I think one of the reasons I wanted to get an appraisal is so that the borrower has an idea of what a third party thinks the property is worth.
100%.
So it's good for the borrower.
Absolutely. And look, from the beginning, one of the key principles that you taught me from day one, because I was not a believer in this space when I was first introduced.
Oh, we were going to skip all of that. You had no faith in what we were doing at all. I was just going to gloss over that. But go ahead.
But one of the principles you taught me at the beginning was you wanted to make sure the borrower knew how they were getting out of the deal before they got into it. What is their plan? What is the strategy for exit? And if they don't have one, we're not funding the deal. And so part of understanding your exit is you need to understand the value and what that range is and what is the exposure time under which that value conclusion is valid. And so I think the appraisal has kind of been the benchmark, that the mortgage industry has used. And so that was kind of the easy thing to go to. Certainly not at all knocking in any way, shape, or form the alternative valuation models or the guys who have created a model, in-house that do that themselves, because they do that successfully. And I'm not at all saying that that's not, the way to originate. It's just not how we've done it.
But we use the alternative sources too, right?
Absolutely. Today we do. But not for the loans we close. We do that for our own evaluation of a deal.
How good do you think those are?
So, I think they are actually really good as long as you're dealing in an MSA. So there needs to be other, movement of real estate that those valuation tools can pull in. And it can't be anything special. So, the ADUs, the mother-in-law suites, the
Tell everyone what an ADU is.
The accessory dwelling units, which is kind of the popular thing now that we're seeing a lot, creating a rental property on your primary residence. What used to be the garage apartment or the pool house, that is the ADU. But today, they're monetizing those and renting them out to create additional cash flows.
Okay.
And so those type of things make it difficult because those aren't as standard. You can't value those as well through the alternative valuation products, in my opinion, or at least we haven't figured out how to do that.
Right. So, and we'll speed it up because we're coming up, I think we're coming up on 45, 50 minutes, just like that. So we might have to do part 2 because there's a lot of more entertaining stuff that we could certainly talk about together. But I do kind of just want you to talk a little bit about, if you could just summarize your evolution in what you did 10 years ago for Longhorn. And because look, I think one of the things that's interesting is I feel like you and I have done everything. We've had every role, right? Unfortunately, we were originators for a little while. We were underwriters. We were processors. We've been servicers. We've been the REO team. You have, overbuilt properties in St. Louis. You've been the contractor. I'm trying to think of all the roles.
6 months in St. Louis.
Look, you've been the accountant.
Yeah.
You've been the tax advisor. You've been the. I'm trying to think of all the roles, because it's fun. We're doing this podcast right now. Today's Wednesday, February 12th, and we're having our company conference. And so there was a time where there was me and you and like 3 other people in our business, because you and I were wearing 42 hats each.
Enjoying every minute of it.
Well, I don't know. When we were the sales guys, I don't know how much we were enjoying that. That was
rough.
That was
rough.
That was a little challenging.
You do what you got to do, right?
You do what you got to
At
do.
the end of the day.
And so now, just because I think it's pretty cool, we're coming up to this company conference, and
yeah, we'll have 76 people live in attendance at our company conference this year, which is amazing.
And so your roles evolved. I mean, you still wear a lot of hats, unfortunately, but you don't wear quite as many hats as you did. But what's your main role now? What do you do? What do you think your focus is? Because I know you do a lot of stuff.
Yeah, I think the focus for me today is finding areas where we can do better, right? Both from a technology standpoint, are we leveraging what's out there, evaluating the options in the technology space? The new thing everyone's talking about is AI, and we certainly haven't adopted that in our organization yet. I think it's still young, so I don't know that we're ready to do that. Today, as you grow, and you make more money, it creates additional challenges, right? And you've got to create the safeguards to protect our investors, to protect our banks. And so I think that's where my time has been focused right now, just making sure our infrastructure is in place. And then, the accounting backbone, which is what we are going to grow on in the future, is been kind of the focus for the last year and will be for at least the next 2 for me, in getting that fine-tuned and right where we want it. Ultimately, though, I still love talking to borrowers. Yeah. I still answer the servicing line.
Which you should stop, by the way. Should stop.
Yeah. But, it also keeps me in touch with what's going on, looking at our portfolio, what's in our portfolio. And so I still say I can do everything. I can prepare a set of loan documents. I can, clear title. I can work with a title company. I can approve a HUD, review a HUD. There's not a job in our organization that I don't feel I could do. I might not be as fast as our team anymore, but certainly.
So before we sign off here, though, I think this would be kind of fun to tell everybody. So when you got here in 2010, how many loans do you think we had done when you got here?
It was definitely less than 100.
Yeah, I would agree with that. For sure. And then today, how many loans? I mean, it's kind of crazy to think about, right? So we're coming up on a big number, but how many loans, ballpark, have we done through today?
10,000.
We're getting close. We're not quite there.
Yeah.
We're not quite there. And then we've done almost $1.8 billion in loans over the last, since 2008.
And it just feels like it's moving faster than it ever has been. Yeah. At the rate at which we're originating. Look, we're having fun.
Yeah. But it's crazy. To me, it's a crazy thing to think about. did you in your wildest dreams think that when you came over here and started working with me, that you would be part of a private group, right? It's done almost 10,000 loans and coming up on $2 billion of loans.
Yeah, never in my wildest dreams did I think that, one, that there was a market for it.
Yeah.
Two, that we could capitalize on that market. And three, that we could become the player that we are in the space today. Ultimately, I do think a big part of that is the foundation of how we still interact with our customer today. The transparency, I've heard you say multiple times, we keep our pricing on our website. What we charge, it's there clear as day, from admin fee to processing to credit. If we charge it, we're going to disclose it. We don't play hide the ball. I think that's something our borrowers have appreciated. We're consistent. When we say we're going to fund a deal, we fund a deal. And I think that's ultimately what our clients look for. It's the reason that we have been successful. And it is back to, I remember this is probably 7-8 years ago. You and I were talking one day we're talking to Tony. We're talking about banking. And we said, we are banking the way bankers used to bank. You get to know your borrower. You shake your hand. And I think it's been a big part of Longhorn's growth in our go-to-market strategy. We have loan consultants, boots on the ground in most of the markets we're originating in. And those guys meet our borrowers. They shake their hand. They know them personally. That is a preponderance of our portfolio. We have personal relationships through our frontline sales team that is out there helping real estate investors create that generational wealth.
Yeah. Well, Jeremiah, this has been a ton of fun, like for me, kind of reliving, walking down memory lane a little bit. Look, and we're probably going to have to do part 2 because we can talk about like the focus of really, what the real estate market is right now, how Longhorn fits into that ecosystem. Maybe we can be, a little more borrower focused, the things that we do at Longhorn that we think are beneficial to the borrower. And we can come and talk about this thing. Look, you can be my second guest, third guest. You and I can talk about it. We skipped a lot of the interesting stories and funny stuff and everything. But I think this was a great start for us. Thank you. Not thank you for coming because, I told you had to come. So, I really kind of forced you on that one. But thank you. It was a lot of fun and everything.
Absolutely. This is great.
All right. We're signing off.
Call up Longhorn, told them let's make it rain. They said, boy, we got you, gone and do your thing.